Hi, I'm Pat Gray, and I'm a reverse mortgage specialist. A lot of people ask me whether or not a reverse mortgage would work if they have an existing mortgage. And yes, it will, depending on certain circumstances. Generally speaking, the amount of money that you can borrow with a reverse mortgage is dependent upon your age and interest rates at the time. So for example, we all know that you have to be at least 62 years of age to get a reverse mortgage. So let's use a couple that is 70 years old and say that they have a home that's worth about $200,000. They might be able to borrow approximately 67% of the value of their home. So that would be about $134,000 on a $200,000 home. That would mean that their mortgage balance on their current mortgage would have to be under that in order for the reverse mortgage to pay that off and take the place of that existing mortgage. So if they had a mortgage that was in the 150 range, it would be too high and they might have to come to closing with cash, which can also be done. Sometimes it is worth putting out a little bit of cash to extinguish a mortgage that has monthly payments that are going to run for another 20 years or so. So definitely having an existing mortgage can work. It is very favorable sometimes to get rid of that mortgage. Some people ask me, should I refinance my house with a traditional mortgage, maybe a home equity line of credit, or a reverse mortgage, which is the better way to go? Well, that depends on your circumstances, and that's where a conversation with me and letting me know what your circumstances are would help us evaluate that together. But generally speaking, a lot of people who are in their older years cannot qualify for a traditional mortgage because they don't have the income, perhaps. They may not have the credit scores if they've had financial trouble anytime recently. And so a traditional mortgage might be out of the question for them for those reasons. But additionally, if they refinance with a traditional mortgage, they're going to have payments to make. And that's going to mean more financial stress in the future having to make those payments. So a reverse mortgage allows you to refinance, get the cash that you need, perhaps extinguish that existing mortgage, and then not have to worry about payments. And you don't have to worry about credit scores or income because you can qualify for a reverse mortgage without those things being taken into consideration. And many seniors are on fixed incomes that would not enable them to qualify for a traditional mortgage. Many people ask me too, should a reverse mortgage be only a last resort? Absolutely not. A reverse mortgage is something that you can use in your financial planning for your retirement, for your golden years. It is not something to be looked at as a negative thing that you have to do because you have no other choice. It is something that you should consider in your financial planning, in your retirement planning, because it may be just the tool you need to help you get by with perhaps your other savings, with investments that you may have made, and those investments can continue to grow for you while you take advantage of the tax-free cash that you can get from your own home. A reverse mortgage is not just a last resort. It should definitely be something that people consider as part of their financial and retirement planning. It's a great tool to afford you tax-free cash. We're sitting in our homes and we've got cash at our feet sometimes that we can use, and most of us don't consider that. We don't think that we should draw from our homes. But why not draw the cash out of that asset that is your home on a tax-free basis instead of taking it from a 401k or an IRA or other investments for which you would have to pay income tax? It is definitely a tool that should be in the mix for everyone, not just a last-ditch effort. The only way for you to make an informed decision about a reverse mortgage is to have all the facts. 706-897-2822.